You ever get all dressed up with no place to go? With employment numbers out of Australia, rate announcements out of the Eurozone, and a host of earnings, we would think that this market would be flipping flying down the tracks. Well, you know, sometimes that's just not always the case. Welcome to the MTI Minute. This is Kevin Dixon, Senior Trading Analyst at Market Traders Institute. Today's one of those inside days. Today's one of those leery days. And after we had the ECB rate announcement, we were talking about not even talking to raise rates until 2020. For real, at some point, zero is still a number there, and that's exactly what rate announcement we're left at on the day. So I'll tell you what, as always, I'll let the charts do the talking. Let you and I go into that SPY right about now. And check it out, an inside day. What is an inside day? Well, if it's raining, it's a day that you stay inside when you play. But what we're working with is a candlestick that is trading within the high and the low of the prior day. This is generally a consolidation day. Now, we've had a couple of days of selling. We weren't able to sell very well. SPY is below the 10% level. We remain in the middle of these boring moving averages, which aren't doing flip and shinola. But remember, a no-fly zone is a no-buy zone. The diamonds, the Dow Industrial Average, day after UTX, IBM, and Procter & Gamble put a good stamp on the day. We were down over 150 pips on the day, like I told you to watch out for. We're actually trying to post on this 50-day EMA right now, and still not getting any traction. So a really slow Thursday as we're heading into a very quiet fundamental news calendar on Friday. Next week, earnings are really going to start blowing it through the roof because Apple comes to the view on Tuesday. Right now, this is the Qs, the NASDAQ 100, still in a correction there as well. And again, I know the moving averages can be boring, but the 50 and the 200 period EMA are two of the most widely regarded technical indicators in the market. It doesn't matter what instrument you're trading, futures, stocks, ETFs, Forex currency pairs, any market is going to regard these, and all market pros know that those numbers are there. So let's get right back into those charts here. And semiconductors trying to help things out. Not too many other things flailing the Qs today. And the Russell 2000, the IWM, this is where I have all my levels drawn up for you. The 3 to 5, the 10 to 15 correction below the 20 reversal. We're still in a deep correction, the Russell, though. The Russell is staging a little bit better of a rally on the day. Now, as I talked about a few of the things that were reporting earnings, one of the biggest influencing factors moving on the day were the semiconductor complex. We had a couple of these that were up over 15 to 20%, believe it or not, and those continue to roll up. So let's go into semis. We're Texas Instruments with an earnings beat. Now, again, this is not the best looking charts. You know, it doesn't necessarily mean it's the best looking charts. Stocks setting 52-week highs, those are great looking charts. Stocks setting 52-week lows, those are great looking charts. But when you have this type of sporadic price action, semiconductors have been on the sell. Because remember, what helped spur a lot of buying into semiconductors? The technology of transactions, the blockchain technology that was the whole key to cryptocurrencies. Well, without the demand so much for cryptos, blockchain evolves, but we saw a lot of these semiconductors in the dip if they've had to lower their guidance. But Texas Instruments kicking like a chicken. Let's go take a look at a few more here as I roll right back into the chart. A really grooving mover today was Xilinx. Xilinx is up over 17% in session and is bang zoom off to 52-week highs there. Now that is a clean breakout. Now next thing you know, Broadcom acting in kind, Broadcom near the 52-week highs. Here's the day's action, Broadcom to 266.72, getting pretty expensive. If you're looking for a value play, this is AMD. AMD still, I wouldn't touch this below $22. I just don't think it's got enough verve. It does look like the buyers are stepping back into Micron. Now, when we talk about earnings, it's not just the stock reporting, it's the sector. Not every one of these semiconductors are reporting today, but most of the entire basket is up because of the optimism generated by Texas Instruments, or the optimism generated by Broadcom, or even Xilinx. And so birds of a feather, they really flock together in the stock market, just as currency pairs tend to move within the group as well when you're centered around a currency. Speaking about currencies, Little Bird told me that we might want to go check some euros. So let's go do some euro shopping right about now. I'm going to hop right on across the pond, skip to the loo, skip into the loo. There's the EUR. So we'll hop on in here, and I'm going to just tell you this. I was on air during the opening bell. I'm on the air every day on opening bell. Opening bell is a program where I'm setting up the trading day. I'm looking to identify, is it a trending day? Is it a non-trending day? Is there volatility? If so, where are we watching? So I went through this initial move down, and then I watched this whipsaw go back and forth. And I told my traders in the room, you know what? If you're not a day trader, you're sitting in cash. I'd rather be short euro yen. I'd rather be shorting euro dollar. And when I see a choppy chart like this, due to the unpredictable nature of when they had their conference call, when Mario and the deputy got on there, his little deputies, Baba Louie. So Mario and Baba Louie got out there, started talking. We saw this price action rolling into the euro, not only on euro dollar, but even more. Here's euro yen. I've got euro yen boxed in because to me, this is a great setup. We're within a rectangle here, so I don't want to get trapped into playing crap in the middle of a channel, high and low. I want to get a breakout going here. I'm not here to pick bottoms. I don't agree with doing that. I think it's a nasty habit. So what I want to be able to do is break higher and be a buyer, or break low and go with the flow. In the middle here, I love the rectangle due to the simplicity and patience of the pattern. Consistent enough, look at the euro going all over the place. This is euro Canadian dollar. No one's really grabbing a hold of the controls and taking the seat. Also boxed in a little bit of euro New Zealand here. And this continues to extend my rectangle even further. Like I've said, I don't want to play in a no-play zone. I want to play in a breakout zone. That's the way I trade. That's the way I roll. That's what I'm watching for. The Euro Aussie, look at that running all over the place today. Now, the Australian employment numbers are really good, strengthened up the Aussie early. But this mix mosh mash is just not really good for making cash. You got to be patient and let these things develop. Remember, one of the things that's hardest to do is recognize when there's no position to be in and staying in cash. Be patient. Let a setup happen. Day traders trade every day. Swing traders don't. So the first day this week, the pound takes a break below $1.31. This is pound dollar. Pound dollar is down the session. A little bit of strong dollar doing some work there. Now the pound does gain against a couple of other currencies. The New Zealand dollar and the pound have kind of flattened out into what is a doji, a very neutral candlestick pattern. Canadian dollar gains against the pound after it could not break above $1.75. This is the pound CAD. Look at the pound Aussie. This is just a big, big move up a couple times here on the morning and consolidating beneath $1.84. We did eclipse $1.84. I'd really keep an eye on that price level, and this is the pound yen. Yen weakening up a little bit, but the pound is really seeing some price consolidation. We knew we'd see some profit taking. They talked a little bit more about the potential of a no Brexit deal. That was from Cameron. And so, you still got a lot of uncertainty going over there. Plus, guess what? Check it out. Some news broke that we may not be as close to making a trade deal with China as explained. Really, you don't think that they would have just rolled that information out there optimistically to buy into a rally, do you? No, we wouldn't do nothing like that. That's why I say one of the most important rules I use, there's a rule set I call the Bob Barker rules. The price is right. So no matter what you think is going to happen next, no matter where you see this pattern coming or going, remember, the market is always right, and the market's opinion is defined in the last trade. Take those profits when you got a market moving back and forth like this with the pounds. I'm not even touching this right now until we get that next big decisive break. It may not be Friday. It may be next week, but I got the patience of the saint because I'm in it to win it with the MTI Minute. This is Kevin Dixon. Thanks for tuning in, and we will see you next time.